Prakash Devan, Director with Altamount Capital Management, joins us live. Prakash, good morning. Thank you for joining us. Prakash, it's been a volatile September for Indian markets. First a crack, then a great recovery. What's going on and what is the way forward in the short term?
Well, Nico, it seems very clearly markets are again in a mood to be driven more by liquidity flows and a little bit of momentum, but not fundamentals. I think the up move particularly has been completely divorced from the reality on the fundamental side, and I guess it's a function of global liquidity and the kind of forex movement that we are seeing. In fact, globally, I think the US dollar is kind of firming up much more rapidly than what most currencies would have expected or liked to see, and that's also kind of having a bearing on our setup here, our economy here. But my sense is this could probably be in for some profit booking, and you'll probably see a very range bound, of course, a wide range of almost 800 points throughout the series of September and probably early to first half of October as well.
So how are you positioning yourself in the marketplace? What is it that you're betting big on right now, Prakash?
We continue to buy into sectors that still haven't kind of participated in this pullback, and by virtue of that, some of the auto names which we believe would peak up sometime towards the festival season this time around. And being a pre-election year, usually we've seen some of the utility vehicles and two-wheelers get driven fairly strongly by consumption. So Hero MotoCorp, Mahindra and Mahindra are the top picks in these respective sectors. And somewhere on the pharma side, I think the mid-cap pharma is yet to kind of wholeheartedly participate, because we've seen a move towards the larger defensive ones. So by virtue of that, you've got a Unichem, you've got a Glenmark Pharma, even a Biocon. So, there are these stories in the making, fundamentally tenable enough for markets like these. And of course, a little bit of IT as well, because given the fact that the rupees improved a bit, people have started writing off IT too soon, I guess. So that's a time to nibble into IT as well.
Prakash, has the macro for Indian economy turned around? The trade deficit data which came earlier this week was positive. The IP data which came last evening also is stable. Do you think the worst of the macro reading now is over?
I don't think so, Nico. I mean, and why I say that is, if you look at the base effect, last year, same time around, before Mr. Chidambaram actually came on board, we were at one of those, lowest in terms of confidence, and the macros were absolutely in a bad shape. What's happening is, by virtue of that situation on a year-on-year basis, also things probably look mildly better. But I would wait to see this improvement as a trend before jumping to a conclusion that things are really improving. And that can only happen if this is slightly more sustainable, maybe a quarter or so, and not just a blip, because, one swallow doesn't make a summer. So it's very simple. It could probably be flatter to deceive again.
Graphic, and that's the IP and Nifty correlation. And trust me, there's a negative, there is no direct correlation here. Every time IP data has been positive, then that particular day or the very next day, Nifty has taken a knock of about 1.5 to about 2%. Reverse it around, every time the IP data has been positive, which was positive for the month of June, markets have gone down. So if I go by historical average, Prakash, today could be a bad day because IP data was positive.
Well, yeah, if we were to kind of extend that postulate, yes. But even the SGX Nifty does indicate a little bit of weakness. But my sense of it's more on account of profit booking, continuation of profit booking on some of the heavyweights that have some very sharp run-ups. So I think that's where it's going to kind of make a big difference. And given the fact that the data could improve means people would have to jump into other sectors as well, which till now have been probably ignored. So you'll see some high beta moves happen in the next couple of days, maybe the whole of next week. But markets could probably be choppy and with a downward bias for a while.
Prakash, now that crude prices have stabilized, rupee has appreciated, would you be a buyer in ONGC? Because this is one company which will still benefit because of a weak rupee.
Yeah, I mean, it does, unlike what we've seen for the oil marketing company, this is also a company that could kind of benefit by this move. But, I'm not too sure whether the rupee's move or strengthening that we've seen is deep enough and sustainable enough for the likes of ONGC to really, make too much of money out of. And the other thing is, we could have, the Syrian crisis getting taking a new ugly shape, ugly turn any moment, any time. Maybe right now it doesn't portend as such, but it could happen, and that makes it a very speculative trade. I would rather stick to Reliance, which I think is going to surprise the street with the kind of earning profile that it will go to clock in the September end numbers as and when they come up in the first half of October. You've seen open interest build up in the rollovers significantly for Reliance, and I think a little bit of profit booking was warranted given the kind of sharp run up in a heavyweight like Reliance. But I would still stick to Reliance and not ONGC.
What did you make of the JP UltraTech deal, Prakash, and what does that do for your outlook on the cement pack?
I think very clearly it's kind of awakened the sector as a whole, given the kind of strong consolidation dosage that it's seen in the last many months, and then this being one of the largest and the most talked about. My sense is cement will see, the existing players with huge capacities and a good footprint or market share will definitely see a huge, re-rating of sorts as and when people start looking at some sort of an uptick on the ground on the construction side, on the real estate side. But very clearly with no new capacities added, these guys are sitting on a gold mine as and when things turn. So ideal time to buy into a sector which is down and out and just at the cusp of a turnaround of sorts in terms of outlook, if not necessarily earnings. So I think great time for UltraTech continues to be a top pick in that entire pack.
Do you think JP Associates now will qualify as a stock you should buy on every decline? Because here's a management who has taken a brave move of selling a good asset in order to repair their balance sheet. Do you think markets are likely to reward this move?
Well, adversity does tend to get people to be quite brave, Nikunj, and I think there was not much of a choice that the management had. But yes, it is very clearly a decisive move, selling out, starting to sell the family silver of sorts. But 23,000 crores as a group, the kind of leverage that they still carry on their books is significant. So I would like to see some more moves that they could kind of carry out in consolidating their operations. But once that happens, I think you'll see a huge change in terms of the outlook for the group and for JP Associates as a flagship company. And that's the time I would probably look at it, but not maybe in such a tearing hurry to do so now.
Prakash, what is the problem with stocks like Yes Bank and IndusInd Bank? Expensive valuations or rich valuations or growth concerns?
I think it's both. The kind of valuation that the market has ended up according to some of these new age growth-driven, growth-oriented banks kind of took them to that overbought zone, and they're as expensive as an HDFC with such a huge pedigree and such a huge defense and a completely ring-fenced operation. Where I think it's going to hurt them in terms of growth, Nikunj, is we probably might not see takers for high-cost lending from people who have high-cost borrowing in the first place. And given the fact that the interest rates are not softening to make things easier for these two banks, and the retail expansion could be as competitive with others also now having the freedom to set up branches, it's going to be a little bit of a tough call to make, because the CASA ratio could only be difficult to grow from where it is, and in any case they are way behind some of the other larger earlier banks that we've seen. So I would believe you need to tread with caution when you buy into these banks, even at lower levels, because they might certainly find themselves out of favor if things take a turn on the positive side for the other PSU banks.